Today, we have with us the management represented by Mr. Ankit Patel, Chief Executive Officer, Mr. Gurjan Singh Chahal, Chief Financial Officer, and Mr. Bharat Modi, Investor Relations Advisor. Before we get started, I would like you to remind that the remarks today might include forward-looking statements and actual results may differ materially from those contemplated forward-looking statements. Any statement we make on this call today is based on our assumptions as on date, and we have no obligations to update these statements as a result of new information or future events. I would now like to invite Mr. Ankit Patel, CEO, Meghmani Organics, to make his opening remarks. Over to you, sir.
Thank you, Hiral. Good afternoon, everyone, and very warm welcome to the Q3 and 9 months earning call of Meghmani Organics Limited. Before highlighting the quarterly numbers, I hope all of you and your family members are safe and healthy in this third wave of COVID. First, let me give you the quick overview for our Q3 numbers. Amidst the challenging business scenario, Meghmani Organics top line surged by nearly 44% to 640 crore. It was mainly aided by the higher volume and better realization in agrochemicals and the pigments business. The EBITDA for the quarter stood at nearly 77 crore with a margin of 12.1%, and the profit after tax for the quarter surged by 22% year on year to 68 crore with a margin of 10.6%. Highlighting the 9 months performance, our business registered the robust growth of nearly 44% to 1680 crore, and it is thanks to better realization and the higher volume from the agrochemicals and the pigments business. EBITDA during the period stood at 242 crore with a margin of 14.4%, and the profit after tax registered a strong growth of nearly 34% at 201 crore, owing to exponential rise in the other income and the decline in the finance cost. The PAT margin stood at 12% for the 9 months. On the balance sheet front, Meghmani Organics cash and cash equivalents stood at 43 crore as on 31st December 2021. Company continues to maintain its low-cost debt stance, resulting in a comfortable debt-equity ratio of 0.36. Meghmani Organics return ratios like ROCE and ROE on annualized basis remain robust at 16.3 and 21.4% respectively. On the capex front, the agrochemicals ongoing capex of 310 crore is progressing as per the plan, and the commencement for the commercial production is expected to begin from the second quarter of FY23. It will additionally contribute nearly 600 crore revenue on top line on the full year of operation basis. During the third quarter of FY22, Meghmani Organics acquired Kilburn Chemicals Limited for 132 crore, thereby fast-tracking its foray into titanium dioxide. The mentioned acquisition was funded from the company's internal accrual. The plant is located at the Dahej industrial area in Gujarat, and its existing titanium dioxide capacity is 16,500 tons per annum. The company is planning to double its capacity to 33,000 tons and will incur the total capex of 600 crore, including the acquisition cost of 132 crore, which will be funded by an appropriate mix of internal accrual and debt. Capex for the commercialization of the existing capacity in phase 1 will be 275 crore, which will include again the acquisition cost. We expect to commercialize the first phase by Q3 of FY23. The second phase for doubling the capacity will incur the capex of nearly 325 crore, and it is expected to commence the production in the Q3 of FY24. With both the phase expansion on the full year of operation basis, it is expected to generate revenue of nearly 700 to 750 crore. Meghmani's titanium dioxide project adds diversification from the company's existing phthalocyanine-based pigment And additionally, it strengthens Meghmani Organics' overall margin profile and higher return ratios in the upcoming financial years. Meghmani Organics clocked a top line of nearly 1,623 crore in FY21, and it plans to double its revenue by FY24, fueled by the capex plans. Additionally, we have been consistently raising our dividend payouts for the past few years. Despite allocating significant capital towards capex and needing substantial financial resources to support our growth plan, Meghmani Organics remains committed towards rewards its stakeholders with a sound and sustainable dividend distribution policy. India's chemical industry is at an inflection point thanks to the multinational companies opting for China Plus One strategy. Meghmani Organics is well placed to tap these growth opportunities by being committed to maximize its return on investment and create value for our esteemed stakeholders. With this, we would be happy to take any question that you may have. Thank you.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 2. Ladies and gentlemen, one moment please while we poll for questions. The first question is from the line of Manan Shah with Moneybee Securities. Please go ahead.
Yeah, hi. Thanks for the opportunity. So my question is that initially when we announced our foray into titanium dioxide, we had announced a capex of 400 crores for this 33,000 metric ton capacity. And today we are revising that number upwards to 600 crores. So if you can just help us understand what has led to this escalation, because I thought that since we got this plant from this Kilburn plant from NCLT, we would have got it at a below cost value, and you indicated that we'll be spending additionally capex for this plant as well. So if you can just help me understand what has led to this escalation.
Sure, Manan bhai. Thank you for your question. When we acquired the asset in the third quarter, and now our team has already taken over the position, started evaluating technically the plant, machinery, where are the bottlenecks and everything. And based on that, we came to know what were the lagging point in the plant to start the existing capacity of 16,500 tons. And in the next phase of another 16,500 tons to make it 33,000 tons, we have identified the bottlenecks. For that, we have also making some changes in the existing utilities, which is incurring a major cost. At the same time, we are also adding the capacity to upgrade the grade from anatase, there are two grades, anatase and the rutile grade. So we are changing the grade. So for these two purposes, the capex will be high. And again, there is a byproduct from the plant, which is handling the byproduct is a key challenge. What we thought that the plant will have the capacity of handling the byproduct, but it was not there. So we need to make the additional capex to handle the byproduct, which is a sizable volume capex. So all that keeping in mind, the capex has increased. At the same time, you already know that currently the steel, cement, all of them are at very high price. So compared to the earlier days, the capex cost goes relatively high.
Okay. Just a small follow-up on that. If we had not acquired this Kilburn plant, and if we were to put a greenfield capacity for this 33,000, then what would have been the capex?
It would be little higher than that. It would be, I would say, a couple of hundred more higher than that.
Okay. And you mentioned that we are changing the grade from rutile to anhydrous or the other way around?
Anhydrous to rutile.
Anhydrous to rutile. So does this result in a higher realization or anything? Because the revenue expectation is still the same from this plant.
Apart from the realization, the market is majority for the rutile grade. Anhydrous market is very small. So when we are expanding the capacity, we need to keep that in mind that we have enough market available.
Okay. And before I get back into the queue, just one last question from my side. So Kilburn already had a plant in the south which they sold off to VV Titanium, and then they set up this plant in Dahej. So them knowing the chemistry, they were not able to successfully start this plant. Now, for us, this being a new chemistry, what can be the execution risk for Meghmani for this titanium dioxide plant? Thank you.
Thank you. In fact, that also surprises us that they were having the experience in the south and they were just making a replication of the another plant, but still they made a lot of mistakes in the plant, and that is causing a major problem. At the same time, the utility area, they have made certain mistakes which is not very viable now. So to improve the profitability and to make it more viable, we are making certain changes in the utility area, which is going to cause a major investment. So all those factors keeping in mind, the capex amount is little higher. And regarding the experience of ours into this pigment, titanium dioxide, chemistry point of view, it is not very difficult. It is more from the operation point of view difficult, where we have expertise of handling voluminous pigments and other chemicals in our existing business. So we are very confident that we should be able to run the plant and make it operational as soon as possible. So as per our first planning, we hope that we should be able to make it operational, the first phase of capacity in the Q3 of next financial year.
Okay, thank you. I'll get back in the queue.
Thank you.
Thank you. The next question is from Ayush Mittal with Mittal Analytics. Please go ahead.
Good afternoon, sir. Good afternoon, team.
Good afternoon,
It's good to see the growth that we have done in the agrochemical sector. Congratulations for that.
Thank you.
So, sir, if you look at your agrochem sector segment, we are seeing that the company has been growing very well for last few years, and this time also the growth has been pretty good. Can you share as to what is happening on this front and something about our capabilities, why we have been able to deliver such kind of good numbers and growth, and what are the expectations going forward? How will we maintain this going forward, the aspiration that you have shared of 2,000 crore?
Thank you, Ayushi. Ayushi, if you remember that, company has been making the statement that we want to grow significantly into agrochemical as well as in the pigment division. For the agrochemical, we started doing the capex cycle from last financial year. We expanded the capacity of one of our key product, 2,4-D acid, and this is the first full year of operation. That has resulted very well. In the first year, we were expecting that we would not be able to run our plant at the full capacity, or we would not be able to sell the product very well in the market with such a high volume. But thanks to the regulatory department, we did the registration into various markets for this product, and that clicked very well with our capex plan. So by the time we were starting the higher capacity, we were having various registration into different markets like US, Brazil, Argentina, Australia, many more other markets. And so we were able to cater to more customer base. And this year, our 2,4-D plant has run very well as far as the capacity is concerned, utilization is concerned. Apart from the 2,4-D, other product basket mix also did very well in our pyrethroid range of products, and that is driving the growth for us as well. In the coming year, for the future, we are doing one more capex of 310 crore which we are planning to commission in the second quarter of next financial year. That will help to further for grow in the agrochemical division. Over there, we are bringing a couple of new products. So far, from the investor point of view, we have not made an announcement for which product we are bringing in. I think when we'll be commissioning the plant, at that time we'll be making the announcement, because we want to keep it a little confidential from the market point of view. And those are relatively new products which will drive the growth of the agro division significantly in the coming years as well.
Okay. So, sir, in this particular quarter, we are seeing that most of the agrochemical companies have done very well. Is there some seasonality effect in this, or this kind of performance that we have done in this quarter should be largely sustainable going forward? Also, the margins have dipped despite a significant growth in operation and the realization growth. What is the reason for that?
Ayushi, the thing is, across all the chemical sector, basic commodities price have gone up drastically, owing to the demand, crude oil, supply chain issues, various issues, keeping that in mind. And across the industry, people were able to pass on the price increase to a certain extent. So there is a price increase which is driving the major growth for all the companies into agrochemical division. But the kind of the price increase, whichever was there, nobody was able to pass on it completely in the market. So you can see that across the industry there is a dip in the margin compared to previous quarters and years. So that is the major reason. But we see that in the coming quarters and next year, the things should be normalized, where people will be able to pass it on the better price realization. At the same time, the raw material should also start softening a little bit. So the margin should improve in the coming quarters, and it will help to grow the agrochemical division.
Okay. Sir, coming to the pigment division, that has been a big drag for us for some time now. While when we see the smaller companies, we see that they have been able to maintain the margin. So what is happening on this segment, and how do you think that we'll be able to come back to the margins we used to do earlier?
Particularly in the case of the pigment division, the key raw material like phthalic anhydride, cuprous chloride, which is based on copper, urea, the prices of the raw material have increased. If we just take the example of urea, which is the industrial grade urea, last year it used to be about 20 rupees. This year it has reached 75 rupees. So it is significantly high price increase, and nobody is able to pass on this kind of price increase in the market. Second thing, what has happened, there are certain unorganized players which use the agriculture urea, which is available at much cheaper rate, which is not ethical and legal. But we being the sizable player, and we have a commitment for society, so we have an ethical practice of doing the business, where we use the industrial grade urea, which is of very high cost. So that is one of the factors which is driving us different from the other small unconventional small players, and that is mainly driving the competition and the price pressure. Second thing, when the market as a pigment, as an overall market, when we were coming out of the COVID, everyone was very aggressive to gain back the market share. So there was a pressure from the sales side, and there was a pressure from the raw material side. We wanted to maintain our market share at reasonable level. So that was the strategy decided at the management, that we will not lose our market share no matter what it is, because the margin can be recovered in the coming quarters, and we are very hopeful that in the coming quarters the margin will be recovered very well. At the same time, the export incentive which was there from the government side, NEIS, that has gone completely. Government has come up with a new export incentive, which is a road tax, but it is not applicable to the SEZ unit or on export from on the advanced license basis. So there is again a significant impact, which is approximately 1.5% in terms of the margin.
Okay. And how do we then plan to come back on a normal profitability in this segment going forward?
So now everyone in the market is able to pass on the price increase slowly, gradually. So that is happening. So we hope that in the coming quarters, the margin profile should come back to the normal level, which is in the range of about 12 to 14% for the pigment division.
Okay. I'll come back in the queue. Thank you.
Thank you.
Thank you. The next question is from Pratik Singhania with KGO Investments. Please go ahead.
Just to clarify, it is Sage One Investments. So my first question is with respect to the ilmenite sourcing. So basically, we are competing in titanium dioxide with China, and China, of their total requirement, they source 70% raw material locally and 30% they import. So as far as we are concerned, from which countries are we planning to import, and how do we mitigate this currency risk and raw material pricing risk?
Thank you, Pratik bhai. As far as the ilmenite is concerned, which is the key raw material for titanium dioxide, India do have a capacity and available ilmenite, but the Indian Rare Earths Corporation, they don't have the enough capacity for mining, which they are doubling it right now, and from the next year onwards, they are going to supply the increased capacity to the local player. Apart from that, there is a lot of imports coming from various countries like Japan, Mozambique, African countries, Madagascar, various countries. So easily import is available. The plant is, our plant, the Kilbal plant is at Dahej, where Dahej has got the port to handle the bulk cargo. So logistic point of view, it will be a very good position we will be having as far as the ilmenite sourcing is concerned. So that is not going to be a concern. And regarding the competition with the China, as you have seen that we have made in the presentation we have made clear that the Indian market size is nearly 250,000 tons. Out of that, almost 80% of the titanium dioxide is being imported. So our first target under Atmanirbhar Bharat Make in India policy to supply in the domestic market, where there is already a 10% duty on the product. So we will not have that much competition from China for the Indian market. Even for the export market, we would be able to compete with China.
But sir, in China, currently they have capacity of around 4.5 to 4.6 million tons, doing a utilization level of almost 70-80%. So with that scale and size, and as compared to that, we are planning 33,000 tons.
Correct.
So how do we compete with that scale and size? Because similarly in azo pigment also India is not able to set up as big capacity as they are in China.
Pratik bhai, if we are comparing with the azo, the story is little different. Why we are not able to compete with China? The reason is there are not many players which are backward integrated. The intermediate for the azo pigments are mainly available from China. Now that is a different case. In the case of titanium dioxide, the key raw material is a naturally occurring ilmenite. The cost for the ilmenite is the same for the China or for the India. So over there, from the raw material point of view, there is a parity. Second thing, the major cost is in the manufacturing cost, the utility cost is the major. Now the utility cost, the steam, power, everything we can compare with China. So there is no issue. And we have made the viability point of view, the capacity which we are coming with 33,000 tons is a viable capacity to run the plant. And looking all these factors in mind, we hope that we should be able to generate good amount of profitability and the project is much more viable.
Okay. So last question. So in terms of India, the mining of ilmenite as per regulation can be done only by PSU, right?
Yes, so, that is what I mentioned, Indian Rare Earths Corporation.
Right. So there are 3 other Indian companies also which manufacture titanium dioxide. So, and they are also planning to expand those capacities further. So will this additional ilmenite that will be mined, will it be sufficient to suffice the requirement of your as well as the other capacities of these three guys coming up?
It is. We are just not dependent on the Indian Rare Earths Corporation. In fact, we have already started discussion with the various importers and global players who supply the ilmenite. So, as far as the availability of ilmenite is concerned, there is no issue.
Okay, sir. Thank you so much for your answer.
Thank you.
Thank you. The next question is from Rahul Veera with Abacus. Please go ahead.
Hi, Ankit bhai. Congratulations for a relatively better set of numbers.
Thank you, Rahul bhai.
So just wanted to understand how's the January or this quarter in terms of the pricing or the raw material scenario for the pigment segment itself?
Rahul bhai, for the fourth quarter, now we are seeing the better price realization. For the particularly the case of pigment division. So as I mentioned that this quarter was, I would say, the lowest in the history of Meghmani. We have never seen this kind of profitability, and we are very hopeful that in the coming quarter we should be able to go back to the normal numbers.
Right. Fair point. So then, given the capex, I mean the outflow in FY22, by margin, what will be the debt versus the gross block, and whether that would have included the outflow for the Kilburn? Just trying to understand how the debt and gross block will pan out in FY22, FY23 and FY24, sir.
Sure. Just a minute. Mr. Chahal will answer your question. Just a minute.
Sure.
As far as debt is concerned, so we have, as of now, currently in the standalone, 300 crore of long-term debt. And with the now titanium dioxide coming in at the consolidated level, so our maximum debt should not be more than 550 crore, and the debt equity which we have already said, it will not exceed 0.5. And debt to EBITDA should be around 1, not beyond 1.
Okay. So sir, currently from the standpoint of currently long-term debt versus the RCPS that we have with Meghmani Fine Chem, our net debt is relatively lower. But for this particular project, we'll have to take close to 400 crores of debt over the next 2 years. Is that what calculation sets off?
In totality, we can say, but we will take going by in the two phases actually. So initially, we are planning on 200 to 250 crore of term loan in KCL, which should be available in the range of between 7 to 8%.
Okay. Fair point, sir. Thank you so much, sir.
So comparatively, Rahulji, we have a low interest as far as our debts are concerned. Overall, I'm saying about it.
Right.
So we have natural hedge as well to a certain extent.
Right. Fair point. So just since our first phase will be starting in Q3FY23, I believe the average pricing for titanium dioxide is around $3, or around 200 rupees, I believe. So what kind of sales tonnage can we expect in FY23 itself in the 2 quarters?
So if we consider the FY23, we'll be starting the plant in the Q3. So probably we'll have 1 full quarter. So typically it should generate about 100 crore of about 75 to 100 crore of revenue in the last quarter. So with both the capacity, phase 1 and phase 2, we will have a capacity of 33,000 tons, and looking at the price, we feel that it should generate about 700 to 750 crore revenue on full year of operation basis.
Right, but that will be FY25, right? Then 500, 700 crores.
FY25 will be the full year, and FY24 will have close to 400 crore plus revenue.
Right.
Yeah, and FY25 will have a 700 crore plus revenue.
Super. So then our estimated revenues from pigment are within 1,000 crores. So if you consider FY24, like 400 crores from this, plus base segment business itself is doing close to 750 crores now. So that should be 1215 FY24? pigment business itself?
Yes. So, as you know, Rahul bhai, we informed to the investor that by FY24 we should be crossing for the pigment 1,000 crore top line, which with the Kilburn and the kind of the capex what we are doing, we should cross 1,000 crore top line in FY24. And in the agrochemical division also, we should be able to cross 2,000 crore top line very easily.
Sure. Fair point, sir. Thank you so much, sir. And
whatever we informed to the investor that FY21 was nearly 1,600 crore, and we will be doubling the revenue in the 3 years. So by FY24, we'll be doubling the revenue.
And to add to that part, this quarter we had the highest sales in the agrochemical. It is one of the highest. So agrochemical has been panning, in terms of the top line, it has been panning very good.
Right. Fair point, sir. This is helpful.
Not only that, the sustainability also is assured about that part.
Right. Sure, sir. Thank you.
Thank you. The next question is from Subrata Sarkar with Mount Intra Finance. Please go ahead.
No, actually most of my question has been answered. Only question only thing is although you have reiterated still sir, if you throw some more light on the margin side, sir. So now we are almost at a historical low. So what should be the let's say normal industry normalized margin for us, and approximately how many quarters we should take regarding reaching that? That's the first question.
Subrata ji, pigment division on an average generates industry average margin varies between 12 to 14%. We hope that in next 1 or 2 quarters we should be in that range. For the pigment division, the average EBITDA margin varies in the range of 16 to 18%. We are already in that range in the agrochemical division, and so there is no issue. So both the division put together, we should be able to maintain relatively good EBITDA margin in the coming 2 or 3 quarters, 1 or 2 quarters. At the same time, the Kilburn, which is a subsidiary company named Outside, that business will generate on an average EBITDA of nearly 25%.
Okay, perfect. And sir, just a ballpark, just a bookkeeping question, sir. Any progress on the loan which we have given to Meghmani Fine Chem? Any progress on that?
So in the past also we have been informing to the investor that the Meghmani Fine Chem is also having its own high capex cycle. So they are already doing a lot of capex in the epichlorohydrin, CPVC, chlorotoluene. So I think it will not happen immediately in near future, but we'll have a discussion in the management and we'll make a proper roadmap to reverse it in the coming years.
Okay. Thank you, sir. Thank you from my side.
Thank you. The next question is from the line of Ankit with Bamboo Capital. Please go ahead.
Yeah, thanks for the opportunity and congratulations on good growth in top line. Ankit, if you can tell us, all the technical companies focused on exports are seeing good traction from US, Europe and South American market, especially Brazil. So what is happening? Is there something which is changing, like inventory restocking, and which is leading to higher demand? And how do you see this demand sustaining over the next 2 to 3 quarters?
Sure. So Ankit bhai, what has happened in last 1 or 2 years, relatively the season has remained very well as far as the cropping pattern is concerned in various markets, and that has driven the good demand in the agrochemicals. Second thing, in last 2 years there has been a lot of disruption as far as the supply chain is concerned. So everyone is very they are planning their inventory in such a way that they want to keep a little bit extra inventory rather than losing on their sales. So that has been driving a good growth in the various markets, and at the same time the demand is, as I mentioned, the season were very good in the US, Brazil, Argentina, various markets. The cropping price price, what they are getting for soybean, corn, cotton, everything is very good. So that is also helping the farmers to use more of an agrochemical. And certain key products like, if we talk from China, in last 2 years, the prices have increased drastically. There has been a lot of disruption in terms of the supply from China. So people are giving more opportunity to Indian suppliers rather than buying it from China. So all these factors is helping the agrochemical industry per se from India to grow much faster.
Sure. And how do you see this demand sustaining over the near to medium term?
So even today, if we analyze the channel inventory, which is the key area for the growth, even today the channel inventory is not very high because of the good demand. Whatever they were buying, they are able to sell it in the market. Consumption is happening very well at the down the line level. So we see the demand will remain good in the coming quarters as well.
Sure. And second question was on the margin front. We have seen significant pressure on margins on pigment, as well as, this quarter agrochem has also been impacted, has seen margin pressure. So how do you see the margins panning out over the next few quarters?
Yes. So as I mentioned, pigment division, yes, definitely the margins are under huge pressure in the last quarter. But we are seeing better realization in coming days, and already in this month also we are seeing there is a good price increase, and the margins are coming back slowly, gradually. So for the pigment division, we feel that in next 1 or 2 quarters, margins should improve. Agrochemicals, last year margins were exceptionally high because during the COVID time, the raw materials prices were too low and the demand was good. So the margin of all the companies were very high. But what has happened in this financial year, the raw material prices have increased drastically. So it has normalized the margin in the agrochemical division. So we are having nearly 17 to 18% margin. So industry as an average, it is the average EBITDA margin. And yes, but in coming quarter, we'll try to improve a little bit in the margin for the agrochemical division as well.
So on a long-term sustainable basis, 17-18% are the margins that you are targeting on agrochemicals and 14-15 on pigment side.
About 12 to 14 for the pigment and about 17-18 for the agrochemicals.
Sure. Okay. Thank you so much and wish you all the best. Thank you.
Thank you. The next question is from Dr. Amit Vora with the Homeopathic Clinic. Please go ahead.
Yeah. Good evening. Good evening, Mr. Ankit. Good evening, Mr. Charles.
Yes, good evening, everyone.
Yeah. So I have a question on any foreseeable risk about this titanium dioxide project. What are the risk factors that you see which can hamper the project or in terms of sales or the raw material or anything? If you can.
As far as the raw material is concerned, there is no concern. So far as the sales is concerned, again, there is a very good demand. Again, there is no concern. So we need to make sure that the production we get in time with the better quality. So that is the key area. And we are very hopeful that we should be able to achieve the timeline for getting the production out with the quality.
Okay. And also there was one request that of late safety and disposal of this waste is a really important thing. I hope the company is taking care of its employees and the rest of the things.
Yes. So it is for overall as a chemical industry, it is a very important to run your plant from the environment, health and safety point of view, and from whosoever will have a better system in the EHS, only those companies will grow. So as a management and as a company, we give topmost priority for the environment, health and safety. And we have been continuously upgrading it. And so in the coming days, that will help us in growing much better. At the same time, we are going for the responsible care. Responsible care is one of the top most certification as far as the EHS sustainability is concerned. So we hope to get the responsible care certificate in the next financial year, by the end of next financial year. So our team is working on that. It's a very, very severe exercise, and our team is working on that.
That's really good. We wish you all the best. And my last question, any plan to get into contract research and manufacturing?
Amit bhai, we have been doing certain contract manufacturing, but we don't disclose it much because we have some confidentiality with our customer base. We have certain business for contract manufacturing, and yes, the kind of the capex what we are doing, those are a multi-purpose plant. So in future also we are very hopeful we will be getting certain opportunity in contract manufacturing.
Okay, but you could not disclose any numbers or any numbers regarding sales in contract manufacturing or name of the companies?
That depends on the contract with the company. If they allow us, then yes, we can do it. If they want to keep it confidential, then we also would like to keep it confidential because of our relationship with the customers.
Oh, okay. Lastly, any guidance? Can you just give us guidance for the full year in terms of sales and?
For this financial year?
Yeah, for this financial year, and if possible for next. Next two you have given already by 24.
Yes. So as you have seen that so far for the 9 months, our top line has grown by nearly 40% plus, and I think that will be more or less at the full year of operation basis, we should be growing at 40% plus in this financial year. And by FY24, as we have informed that we should be crossing 3,000 crore top line, so our growth for the next year should be also again 20% plus.
Okay. Thank you so much, sir. That was really helpful. Thank you.
Thank you. The next question is from the line of Krishna Agarwal with Nivesh I. Please go ahead.
Good afternoon, sir. My question is that in the annual report of financial year 20, it was mentioned that 25% of revenue comes from contract manufacturing in agrochem sector. So can you share us what's the current revenue share of FY21 or of current quarter?
Krishna ji, as we have already grown drastically into various of our other products into agrochemical, so the percentage of the contract manufacturing, I think it has gone down from 25% to nearly 20%.
20%. 20%. Okay. Also, can you please share the revenue share of branded products in agrochem sector only?
Which product?
Branded products revenue share.
For us, the branded sales business is a very small. It is nearly 100 crore on the full year of operation basis. It is not very significant. For us, export is a major business, but we are also growing in the branded business. We are coming with certain new products in the next financial year, which will be first of its kind being manufactured in India, because currently it is being imported by the multinational companies. So we'll be making the announcement once we'll get the registration certificate in next 1 or 2 months. We'll be making the announcement for that product.
Okay, sir. Okay. Also, one more question, sir. That you have mentioned in annual report 21 that we have 3 process patents. So when it is going to get expired or any other details regarding that?
I'm sorry, can you repeat your question, Krishna ji?
Yeah, my question is that in the recent annual report, you mentioned that we have 3 process patents. So what is the expiry date of such process patent and any other details regarding this?
See, normally the patent is for the 20 years, and whenever we do any improvement in our existing products, we apply for those patents, and so those patents are for the 20 years, so that people try to avoid copying it.
Okay, sir. Okay, thank you.
Thank you. The next question is from the line of Hardik Jain with Whitestone Financial. Please go ahead.
Yeah. Hi, good evening, sir. Thanks for the opportunity. Most of my questions are answered. Just two small questions, sir. You mentioned in your remarks that we won't be getting the road tax benefit as we are in SEZ units. Am I right?
Hardik bhai, we are getting road tax benefit, but in the case of MEIS, which was till last year, companies were getting benefit on any kind of export, be it from SEZ or be it under advance license sale. Now, in the case of road tax, companies can get the benefit if it is not from the SEZ and not from the advance license. So, for the pigment division, our export is sizably from the SEZ. At the same time, in the agrochemical division, our reasonable business is from the advance license point of view. So that is creating a major problem in better realization for the road tax.
Okay, so that's why that. And what is the benefit that? What is the percentage benefit that that people get if they are not from SEZ or advance license?
It is 0.8% road tax on our export invoice value.
Okay. And one more question, sir. We have other income of almost 26-27 crores versus 3-4 crores last year, same quarter. So what would be the major portion in that?
See, one of the area last year, when under the scheme of arrangement where Meghmani Organics and Meghmani Fine Chem were getting demerged, at that time there was a one-time stamp duty expense which we incurred in the fourth quarter of last financial year. So we made a provision in the last year, fourth quarter, but actually the amount was not that much. So that got reversed as into other income by nearly 14 crore in this quarter. So that is one thing. And apart from that,
exchange gain is there.
There is an exchange rate gain also in the other income.
Just to add what Ankit has said, this 25 crore was the provision made as per the scheme. So there is as per the scheme, maximum cap was for stamp duty 25 crore. But when you pay the actual, that is based on the assessment done by the valuer. So when this final transaction has happened in the quarter 2, so and at that time these were assessment done by the stamp duty authority, and the actual figure came around 11 crore. So there was a 14 crore of the reversal in this quarter.
Okay. And remaining 10-12 crore would be largely exchange gains.
That is exchange gain.
And so you also mentioned in your remarks that you are looking to, reward the stakeholders. So do you have any dividend policy? Do you have any policy where you have outlined that this much percentage of payout you will give as a dividend?
So we have a pretty standard dividend policy, though we have been doing a lot of capex, and based on that policy, there has been a consistent growth in the dividend payout, and that will continue. So we have a pretty standard dividend payout policy.
Okay. That's it. Thank you.
Thank you very much.
Thank you. The next question is from Ayush Mittal with Mittal Analytics. Please go ahead.
Yeah, Ankit, I would like to understand a few things. If we see our numbers, I think almost 70% of our profits will be coming from agrochemical division for next couple of years till this new project comes up. And in this area, when I look at the peers, our product portfolio has a lot of overlap with other leading peers. And many of them, others are doing a lot of capex. Can you share as to what are we doing to maintain our leadership in these products? In some of the products like 2D, we have a major market share in India. So can you share as to what are we doing to improve ourselves in our products or maintain that leadership, or how to grow further and protect our margins and profitability going forward?
Yes, Ayush bhai, as far as our current product portfolio is concerned, let's say for one of the key products is a 2,4-D acid. So our capacity is at par with Atul, and after we did the capex in the last financial year, so we have already expanded and doubled the capacity last year only, and now we are at par with Atul. So you can say Atul and Meghmani at the same capacity level from India. And globally also, we are a leading player in this product now. So we already have a good market share. So in the coming years, also looking at the market expansion and our registration-based expansion, we'll look into expanding the capacity. But because we did just last year only expansion, so immediately there is no plan to expand in the 2,4-D further. At the same time, we are doing the capex of nearly 310 crore into multi-purpose plant with the multi-products. Over there, we are bringing a couple of new products, some backward integration for the intermediates. So that will help in maintaining our market share as well as the growth plan for the agrochemical division in the coming years.
Okay. So what will be the contribution of top 3 or 5 products in the agrochemical division for us in the agrochemical turnover?
So I would say top 5 products will give almost 80% plus revenue.
Okay, and top 3?
Top 3 would be about 60%.
Okay. And when we are selling a product like 2,4-D to regular customers, to maybe other agrochemical companies in foreign countries, and we are doing also selling them in our own registration, what is the difference in our pricing or margin picture that comes in, and how much of our business is under our own registration as of now?
As of now, when we talk for the registration, it is in the export market, typically is always with the customer.
Okay.
We don't have our own registration in all the markets. Otherwise, we need to create a company over there to hold the registration. And then for the better realization, we need to sell in the brand in those countries. So again, there will be a lot of challenges. So as of now, our majority of the business, even in export, is more of a B2B business. And we will stick to that because we don't want to divert ourselves by going into our own branding sale into various markets, because that is not our core competency. If we'll do that, then our focus will be diverted.
Yeah. Okay.
So we'll stick to our core competency.
Okay. Thank you.
Thank you. The next question is from Shikhar Mundra with Vivo Commercial. Please go ahead.
So just wanted to understand, so how much is pyrethroids in our agrochemical revenue?
I would say pyrethroid would be almost 50% in terms of the revenue.
And how is pyrethroids as a market doing? Is it a decreasing market or is it a growing market? What's the outlook for the pyrethroid market?
So Shikharji, as you might be knowing a little bit into technicality because you are asking for the pyrethroid. So let me give you the brief idea. In the insecticides, organophosphates are relatively more toxic, and those are getting banned, like chlorpyrifos, profenophos, acifate, monocrotophos. These products are getting banned into various markets because those are relatively toxic products. Then the second grade comes the neonicotinoid insecticide, which is imidacloprid, thiamethoxam, acetamiprid. These products are also getting banned because these are also little toxic. Whereas when we talk of pyrethroid, definitely we don't say it's not toxic product because it is killing insect. It is toxic, but relatively less toxic and stable product. And these products are growing in various markets, and we don't see any issue as far as the product growth is concerned.
Okay. And for pyrethroids, like who will be our major competitors from India?
Again, in pyrethroid, there are various products. So people say we are in the business of pyrethroid, but they don't have the full basket. They might have 1 or 2 or 3 products, whereas as a Meghmani, we have a pretty big basket. And we can say we are in top 3, but just to give you the number who are the competitors, then Bayer, UPL, Meghmani, Heramba, you can say a couple of them are our competitors.
All right. Okay. And can we get the names of your top products in for the pyrethroid, like which can...
In pyrethroid, we have cypermethrin, we have permethrin, we have bifenthrin, we have lambda-cyhalothrin. These are some of the key pyrethroid products we have.
All right. Okay. That's it from my side. Thank you.
Thank you.
Thank you. The next question is from Ayush Agarwal with Mittal Analytics. Please go ahead.
Sir, you mentioned, first of all, congratulations on good set of performance. And so my question is that you mentioned top 3-4 products and around 5 products have 80% of the product revenue in agrochem. What would be the names of these 5 products?
So as I mentioned, the key products, what we have is the 2,4-D, cypermethrin, permethrin, bifenthrin, lambda-cyhalothrin. These are the key products in our basket which drives the major growth and provides the major revenue.
Right. And in how many of these products would we have backward integration?
I would say majority of them we are backward integrated, and one of the key in the case of 1 or 2 products, we are in the process of backward integration as of now. So maybe by the next financial year, we should be for this 5 product fully backward integrated.
All right. That's good to know. And so last question is that, again, a follow-up on previous participant question. What is the difference, when we sell under our own registration in different markets versus when we sell to our customers in these markets? Like, for example, 2,4-D, when we say that we are getting our own registration, how is it different from selling to our own customers? If you can explain that bit.
Okay, Ayush. The thing is, the differentiation is, the moment you say your own registration, in that case, you are spending let's say in the case of Europe, US, Brazil, you need to do a lot of spending in doing the registration. You need to protect the registration. For that, the cost goes probably sometimes into couple of $100,000, which is very, very costly affair. And you need to hold your own registration. You need to have your own company in those markets to hold your registration. When we talk, we have a registration with the customer. At that time, the data for the product, which are technical data, 5-batch, Physchem, toxicity data, these are our own data under the name of Meghmani. We support the customer with this data, and in turn, the customer does the registration. So what happens, the registration is owned by customer, but in that, the manufacturer, the supplier source is Meghmani. So he can buy only from Meghmani in that case. So that is what the difference is.
Yeah, that was really helpful, and that's good to know as well. So it's good to assume that, in such a case, we would be making somewhat higher margins than selling normal 2,4-D.
See, if we sell our own 2,4-D with our own registration, definitely you will have better margin. But right. For that, you need to do the registration in various markets. You need to hold the company, sell the product in the branding. You need to have the supply chain team. So those will also incur a lot of cost. So
right now in the setup that you just mentioned, that the registrations are owned by a customer, but Meghmani becomes the sole supplier. So in such a setup, we make better margins just than selling 2,4-D in the regular channel that we sell right now.
So that is what the standard format is of selling the product. Or you can have your own registration and sell the product with a better margin.
All right, understood. All right. Thank you.
Thank you.
Thank you. The next question is from Krishna Agarwal with Nivesh I. Please go ahead.
Hello.
Yes, Krishna.
My question has already been answered. Thank you.
Okay, thank you.
Thank you. The next question is from Dr. Amit Vora with the Homeopathic Clinic. Please go ahead.
Yeah, thank you for giving me a second chance. This is regarding creating some shareholder value. Sir, as we all know that the stock price is available at a reasonable price to earning.
Yes.
So are we planning to, just a suggestion that are we planning to have any buybacks? Because this is the best time and price to buy our company's shares. That will create a lot of shareholder value in the longer term by reducing the equity. Do you have any such plans, sir?
Thank you, Amit Bhai, for your suggestion. We will consider your request. We'll discuss in the management. But at the same time, we are doing a lot of capex in the various projects. So I don't know if it is possible at this moment or not, but we'll discuss internally.
Okay. And going forward, any plans since the pigment division is also multiplying and the sales are planning to go around 1,200 crores by 2024, something around 1,200 crores. So are you planning to, demerge that also? Any idea for that? Do you have anything such in mind?
Amit Bhai, as of now, our focus will be to grow the Kilburn chemical to stabilize the product in that segment, which will take nearly 2 years plus time. At the same time, we are doing a lot of capex in agrochemicals. So as a management, we don't want to divert our focus into some other non-core activity. So it will not happen for the next 2 to 3 years. But once both the division will become sizable, then at that time we may think of splitting it again.
Okay. And last question is after this titanium dioxide plant, if we reach 33,000 metric ton, then is it scalable also further in next 5 years, or what are your plans for next 5 years in pigment and agrochemical both?
It can be scalable to very high level. The demand is huge, and there is a tremendous growth. Just to give you the example, in India, the majority of the titanium dioxide is being used in the paints market. The number one player is Asian Paint. Now, the big corporates like JSW and Birla family, Aditya Birla Group, both of them are entering heavily by investing heavily into paints business. So they have seen there is a good growth opportunity as far as the Indian paint market is concerned. So you can imagine that even this kind of corporate, they are investing almost, Birla family is investing almost 5,000 crore on the paint division.
Does our company has that infrastructure to grow it further? That's what I want. I understand that.
There's a huge growth opportunity in coming days time also.
Okay, but do we have infrastructure to grow further beyond 33,000 also?
For the Kilburn chemical, if I just give you the idea, it is having the land bank of 315,000 square meter, 315,000 square meter. So that's a huge land bank, and in this land bank, we can even further expand.
Okay. And even for agrochemicals, you are seeing you are planning something new also further?
Yes, in the agrochemical, again, we have a good land bank available with all the basic infrastructure and the regulatory approval. And over there, we are doing the capex of 310 crore. Probably we are thinking of making one more announcement in the next quarter for the phase 2 of expansion in the agrochemical division.
Apart from that 310 crore?
Correct.
Okay. Thank you so much. Thank you very much.
Thank you. The next question is from the line of Bhagwan Chaudhary with Sunidhi Securities. Please go ahead.
Yeah, hi. Thanks for the opportunity. Ankit, just one question that we are seeing that our exports earlier used to be 80%. Now we are adding almost 90% plus. So just some commentary on that part. That the growth is majorly coming from the exports market, or how are we doing in the domestic market and agrochemical side?
Bhagwan, yes, definitely the growth is more coming from the exports market. At the same time, the projects which we are coming up with, let's say the titanium dioxide will be majority for the domestic market. And capex what we are doing in the agrochemical division will also give a sizable focus in the domestic market. So I would not say that the export will come down and the domestic will grow. Both will be growing, but still almost 70%, around 70 to 75% export will always remain.
Got it. In the current quarter, what is happening there? In the domestic side, are we getting the pricing, or the pricing is mainly coming from the export side?
Yeah, so that is also the factor that as a management we always look at where the better realization is, and currently we are for the product where we are into, we are getting better realization in the export market. At the same time, we also need to look at the seasonal demand into various markets. So wherever there is a demand, wherever there is a better margin, we keep the track well in advance, 1 or 2 quarter well in advance, and based on that we plan.
Okay. And secondly, the capacity you have already mentioned for the 240, this is mainly again the exports, or how much of that would be the domestic?
240 is a sizable product as far as the domestic market is concerned, but as far as our capacity is concerned, it is more of an export market. Definitely, and I would say almost 80% or 85% will always be for the export, with the kind of the capacity what we have.
Got it. And again on this pricing part, if we look in the 9 months, what would be a growth out of this 40% we have grown? Would be from the pricing part and the volume part, if you have some idea.
For the 9 months, as we have grown in terms of 44%. So if I give you the idea of volume, agrochemical volume has grown by nearly 40%, and the pigment volume has grown by nearly 18%. So there has been a significant growth as far as the volume is concerned, and there is a price increase growth also in both the divisions.
Got it. Just the final question for the chair. There is negative interest income part. So can you please elaborate that part? What is
so Bhagwan Bhai, our CFO will explain that. Just a minute.
Yeah, Bhagwan, actually, as you know, our borrowing in MOL being majority having turnover in exports, so we borrow in foreign currency. So due to fluctuation in currency, and that is the impact which is coming into the gain. Just to give example on the euro, so euro has gone down up to 84 level, and where we took at 89. So there is a 5 rupees per euro, there is an impact. So there is a gain coming into the foreign currency revaluation of the borrowings. So that is a 6 crore of gain which has come in this quarter. So our finance cost, if you see on the absolute number, it is 2.5 to 3 crore per quarter.
Got it. Chairman, my understanding is that we have all the foreign currency loans. But in the recent comment you mentioned that for the additional 550 crore kind of the debt which is going to be, we are going to raise it from the domestic market with the 7-8% kind of the rate.
Correct.
So any reason for that shifting to the domestic market?
Bhagwan Bhai, we are doing the capex for the titanium dioxide. As we have discussed, titanium dioxide, we are planning to sell majority of our products into the domestic market. So over there is no natural hedging when we are selling in the domestic market in rupee terms. So it makes more sense in taking the rupee loan for the domestic sales. But when there is exports, and then there is a natural hedging for the debt. In that case, we go for the foreign currency loan. So we keep it balanced as whenever there is a business model of exports and domestic. Based on that, we take a call.
Got it. Thank you so much. All the best.
Thank you very much.
Thank you. The next question is from the line of Rajiv Sehgal, an investor. Please go ahead.
Good afternoon.
Good afternoon, Rajiv.
Exclude other income from the consolidated financials of FY22, first 9 months of FY22, and the first 9 months of FY21, we will notice that PAT as a percentage of revenue from operations in FY22 is down to 7.86% in comparison to 12.26% in FY21. Can you please throw some light on it, the reason for such a sharp decline in the margin?
Yes, Rajiv. There are 2-3 reasons. One of the key reasons is, compared to last year, when the last year was a COVID year, where the crude price went down drastically, the demand was very less, and because of that, the raw material prices were very, very low. So, and we were very bullish on our business last year. So we had booked the raw material for pretty long period at a very low price, which helped in the better profitability percentage in the last financial year. In this financial year, the demand has improved, crude has come back, logistic prices have increased drastically, and all the basic raw material prices have increased drastically. So the raw material prices, because of the increase in the raw material prices, nobody was able to pass on that kind of price increase in the market down the line, and that was one of the key factors. Apart from that, there is a significant increase in the supply logistic cost, which used to be in the range of about 2 to 3%. It has reached nearly 6%. So that is one of the factors. At the same time, in the export, we were getting the export incentive, MEIS, which has gone. Government has withdrawn that export incentive. Now the new incentive is there, which is a road tax, but it is relatively low. So there is to the tune of nearly 1.5% impact on margin just because of the export incentive. So all these factors keeping in mind, there is a reduction in the overall margin. But we hope that in the coming quarters, the prices are increasing and the raw material is relatively stable. And now everyone is accepting the price increase, the logistic price increase. So we hope that in the coming quarters, we should be able to improve the profitability.
Thank you.
Thank you. The next question is from the line of Hardik Jain with Whitestone Financial. Please go ahead.
Yeah, thank you, sir. Sir, titanium dioxide will be a new product for us. So I just wanted to understand, once we start, commencing the production, what is the process where, will it take some time to get the product approval from the customers? Because I think the customer, it is a main raw material for them, and they will be very careful if while shifting the source, So what is your plans about the marketing for this?
Hardik, we are there in the pigments business since almost 35 years, and we have a customer base not only in domestic but over 75 countries. And we have already started discussing with our various customer base that we are coming with the titanium dioxide in next 8 to 9 months time. So they have already shown good interest that there is a good demand and the Meghmani is coming with this kind of product range. So it is nothing but an addition of a product in the existing product basket mix with our existing customer. So yes, there will be some time for the approval, but compared to other players, it will be little faster, and because we are existing pigment player. So we hope that once we start the commercial production in next 2 to 3 months time, after that we should start getting the product approval.
Oh, thank you.
Thank you. The next question is from the line of Ayush Agarwal with Mithil Analytics. Please go ahead.
Sir, thanks for the follow-up. Just couple of quick questions on agrochem business. So do we have, since we sell to our distributors as well in the exports market, do we have any idea on the kind of revenues that we get from the large MNC customers in the export markets?
I'm sorry, Ayush, you were asking about dealers in the exports. I'm not able to get it.
No, I'm trying to understand how much of our revenues come from large MNC customers in the export markets.
I think about 35 to 40% approximately.
Okay, so 35 to 40% of our revenues are already coming from MNC. And can you name a few of them, if that's possible?
Yeah, we have been working extensively with FMC Corporation. We have been working with Sumitomo. We have been working with Adama. We have been working with New Farm. These are few of the multinational companies we have been working.
Right. That's really good to know. And if we are getting such high percentage from them, then that's really good. Sir, my next question is on our upcoming greenfield project in agrochem. Are we on track to start commercial production from Q2, Q3? What's the update? And if you can throw some light on the products that we would manufacture there, and our technical capabilities that we're adding there.
Yes, Ayush, as we have already mentioned that the capex plan is in line. We hope to commission in the Q2 of next financial year, and we are coming with a couple of new products, but we would be announcing the name of the product at the time of commencing the production. Till the time we have kept everything under coding at the project level in the company, because these are relatively new products. At the same time, we have already started doing the registration of the same products into various markets. So we hope that by the time we are commercializing the production, we should have at least in certain market few registration available with us. So that is what our strategy is.
That's really good to know, sir, and wish you all the best. So that's it from my side, sir.
Thank you very much.
Thank you. The next question is from Deepak Khera, an investor. Please go ahead.
Yeah, hi. I just had a question on the financial statements. Could you please elaborate a little bit more on the other expenses which have shown a significant increase, like year on year? So if you can break down the current other expenses at a high level, that will be very helpful.
Yeah. So Deepak bhai, other manufacturing expense includes mainly the electricity, steam, utility costs, then logistic costs, packing costs, all this kind of costs it includes. Typically in this financial year, the utility cost has also increased drastically. We all know that the coal, which is a major source for the steam and electricity, the coal price has increased drastically, and even today it is very high, and that is driving the major cost for the utility. At the same time, the logistic cost has increased, and polymer prices are also very high, and the metal prices are also very high, which has also increased the packaging cost. So, and overall our production capacity has increased. If we look at the volume increase for the agro, then there is almost 40% growth in sales for the volume in terms of agrochemical, and almost 80% volume growth in pigment division. So there is a manufacturing volume increase also there. At the same time, all the factors, the cost has increased.
All right. Thank you so much.
Thank you.
Thank you. Owing to time constraint, that was our last question. Now I would like to hand over the floor to Mr. Ankit Patel for closing comments.
So I thank you, all of you, for taking your valuable time and joining us on this conference call. The company is on a strong growth trajectory coupled with a healthy balance sheet position, and we are very confident to create a sustainable value for all our stakeholders. Thank you very much.
Thank you. Thank you, everyone.
Thank you.
Thank you, Chorus, and thank you, Kiravu.
On behalf